Just a few minutes. 7 plus is not like 7 plus is not. Okay. Yeah. I should do that. There we go. Yeah. So, guys, can you hear me? Please, if you can hear me, just type hi or something, yeah, so that we can just roll. I just want us to roll. Whoever is not in, yeah, let's roll. So if you can hear me very well, then just put a hi at them. Sure. We'll continue. Time is money, guys. Time is money. So if before, at least by 9:30 can be done. 9:30 can be done. So yeah. Okay. All right. Freddy, can you hear me? Freddy, can you hear me, Freddy? Freddy? Can you hear me? Okay. All right. Sure. All right. Sure. Freddy can hear me. All right. Scully is also online now. Okay. I think we can start. Okay. Okay, guys. What I'm going to show you today is going to change your trading life. It's going to change your trading life. I have just been proven. I have proven it a lot of times. And yeah, we're making money. I won't lie. So basically, this one is kind of short. Okay. Okay. So basically, what we do here now, we trade via the nature of the market. We need to understand that first things first, the market moves in impulse, correction, and then if it's reversing, it will reverse. Yeah? That's the first thing you need to know. So I believe that all of us here, we are not first time trading, so we know these things. It's not the first time that we're trading, so we know these things. So let's just dive into the chart, and then yeah, we'll take it from there. Let's just dive into the charts, and then we'll take it from there. Yeah. Let's take my charts. Okay. So basically, what it means now, an impulse is a large momentum or a huge momentum going to one side. Yeah? So basically, what it means is that this is how the market moves. This is an impulse. See, this is an impulse. We have the impulse here. And then this is the correction. Then impulse, small correction, impulse, then gives us a reversal. And then impulse, correction, reversal structure here. And then from there, impulse, correction, impulse. And then from there, it impulse down, give us another reversal structure here. And then impulse. So you see how the market moves. Yeah. Let's see how the market moves. So it's basically all the sequence of impulses and corrections. So I just wanted to get to the framework of what we'll be doing before we get into the strategy. So that's basically it. That's basically it. So let me just do this. So that we are starting the strategy. Okay. Then I'll show you how simple money is being made here. How simple money is being made. Let's go back to play. Let's say here. Okay. So first things first, guys. Now, when we are trading this way, in this method, first things first, if you're going to be analyzing every day, and if you're going to be analyzing every day, first things first, it means that if you're going to be intraday trading, you need to open your daily chart. You open your daily chart. And then when you open your daily chart, because now usually if the week maybe like now the weekend as well is a weekend. If it's a weekend, we usually start on the weekly, to analyze for the upcoming week. So if it's a weekend, we usually start on the week. So first things first that you need to pinpoint on this market. First things first, before you do anything, first things first, you take up your, this is not supported resistance, guys. We don't trade supported resistance here. It's not supported resistance. Make sure it's not supported resistance. So I'm going to pick up the last higher high, which is this point here. That's the first thing I do, right? And then I pick the last lower low, okay? Lower low, or the last lowest low, okay? By zooming out here on the weekly, all right? So already I can see, okay, this is how the market is shaping up, okay? I can see how the market is shaping up. I can see how this market of GBP, JPY is starting to shape up, all right? So by just looking at this, the fact that there is the highest point, which is at around 195, this is for swing traders, guys. This is for swing traders, but we'll work it down to daily trading. So after that, okay, that is just the overall on the weekly. So that's why we don't go to weekly. So from there, I'm going to go to the daily. Okay, I'm going to go to the daily. This is where we usually start trading every day. So when I get here on the daily, I do the very same thing on the daily. I'm going to, let me remove all the browns. I don't need them anymore. So here on the daily, I'm going to pinpoint my last highest point. This is a fake out. This was a head and shoulder, you can see. So this could be my last highest point. Okay. If you know, this is my last highest point. So from there, now I'm going to pinpoint my last lowest low, which is this one. This is on the day. Okay. Then from there, I'll highlight also important lows. Okay. So we have this one here. This is the one that can give us good opportunities. Let's remove this. This is the last one. Right. So this is the last lowest low here. So now we want to see how is the market moving from this point here going upwards, right, to this point. Right. So because we know this is an impulse, and then after an impulse, we expect a correction. This is just a bigger correction. Right. This is just a bigger correction. So we just come here, connect our lowest points there, and then from here we connect our highest points. You see? So that's what we do. We connect our lowest points and our highest points, right? Our lowest points and our highest points. And then now, if you check, what kind of structure is this? What kind of structure? You guys, you do know rising wedge, falling wedge, but for me, I see something like a falling wedge. I think, yeah, I see a rising wedge, a rising wedge. So after this, after finding out this on the daily, you go to the 4-hour, okay? You go to the 4-hour. The market does not change, guys. The market does not change. we go to the 4 hour. This will be a 4 hour. This will be how your 4 hour will be like. So here on the 4 hour, we're just going to refine. We're just going to refine our points. Make sure that it's at the highest point. At the highest point, right straight to the week. Right straight to the week. Okay. So here on the 4 hour, what do I see? What do I see? What do I see? Okay, we had a touch there. And then here I can see that, all right, it seems as if we are trying to form something like a head and shoulder, right? But then it's not yet, it has not yet developed. It has not yet developed. So from the 4 hour, now, from the 4 hour, I'm going to go inside the structure. I'm going to go inside this structure. I want to go inside this structure. Okay. I want to go inside this structure. So going inside this structure now, what do? I just zoom in. There we go. And then now I just check the same thing that we did on the day, the last lowest low, which is this one on the 4 hour. We connect it, connect all of them together. There we go. And then from here, we connect the highest. All right, there we go. Connect them. We have a nice channel right there. We have a nice channel right there. Okay. We have an ascending channel. Okay. And we know that an ascending channel is a reversal for a sell position. Okay. An ascending channel is a reversal for a sell position. So already we can see that on the outside structure, we have a rising wedge. And then inside, what we have already here on the H4, this is the 4 hour structure, we have an ascending channel. Okay. So we already know that we will be expecting some sell positions, but the most high probability trade that we're going to get is if this market comes here, this last lower, higher point, higher high on our left. So from here, what we do, we go down to the 1 hour. We go down to the 1 hour. Same thing, we go down to the 1 hour. We go down to the 1 hour. And then here on the 1 hour, what we have is at the point we connect. We connect them like that. Their eyes. Make them like that. This is the 1 hour. This is how the 1 hour is looking like. So if you can check here on this 1 hour time frame, already you can see that, okay, sure, look, we have the first touch, second touch. Usually we expect a third touch, right? We expect a third touch of the channel before any reversal. On the third touch, it is where we usually get our high probability trades and the reverse on the third touch. Right? So we are expecting the third touch. So here we have one. See, we have the first touch, second touch. But also again, bear in mind, you see something like a head and shoulder, all right? You see something like a head and shoulder here on the second touch, of which this is confluencing with the outside structure. It's confluencing with the outside structure, okay? So let me just move this. Move this. Move this. And then now, we're going to look at this market situation here. What's happening here? What's happening here? How is this market coming down into this trend line? Eh? Want to know how is this market coming down into this trend line? Yeah. Is it coming down impulsively or correctively? If it's coming down impulsively, then we can take a sell position when it breaks this trend line all the way to the 90% this here, because you can see there is a head and shoulder. But then if you look at this market closely again, on the 15 minutes, this is where usually people get caught off the market. Like they got caught off the market. They think, oh, this is a head and shoulder. Let me sell. Let me take sell positions. Only for the market to play otherwise, only for the market to play otherwise. So this is basically what's going to happen. Already I can see that here the market came down here correctively with respect to the trend line. We have a descending channel After the descending channel, we had a breakout of the descending channel. So what I'm expecting from this market from Monday, I think we might have something like this and get something like maybe an inverse head and shoulder, and then from there it can go up. But then we will see. That's what I'm seeing. It's quite obvious. I mean, once you see it, you can't unsee it. Once you see it, you can't unsee it. Once you see it, you can't unsee it. So let's get to the strategy. Let's continue the strategy. Let me work on another play. So that maybe if you can just work on 3 pairs and then you guys can open the floor I can open the floor for questions because I'm just too fast. I know. Because when you know, you know. That's the thing. So there's gold also. There's gold, guys. There's gold. There is gold. Gold is going to pay. Gold is going to pay. Gold is going to pay. Anyways, let's get into the strategy. Okay. Let me remove everything and just start from the point. Okay, so from here, same thing, guys. Same thing. Okay, this is the daily. We don't want to go too far back in time, so we just go to the daily. And then here on the daily, what am I going to take? I'm going to take my horizontal ray, take my lowest lows. See, these are the double bottom, lowest lows. And then on your left-hand side, you see how the market is moving on the left-hand side. Impulse, correction, impulse, correction, impulse, correction, impulse. See, and then from here, double bottom. And then what's happening? Impulse, correction, impulse, correction, impulse. Even this one is it's straightforward. It's straightforward, this one is called. So this is how the market moves. Always, no matter which market you are in, it does not matter which market you are in, it does not matter what indices you are trading, either it be gold, either it be mass, either it is anything. This is how the market moves. Always. So it's always impulse, correction, impulse, correction, impulse, correction, impulse, reversal, impulse, correction, impulse, correction. That's how the market moves. So from here, what do I do? I now go and select. Okay, there we go. We broke this once here. So the next is this point here. Okay, so already we can see we broke this one. The next one is here. The ultimate one being that one up there. Ultimate one being that one up there, and then here. And then from here, okay, from here now, we want to see, okay, we have this. You know why I love this market. I love this market thing because, like, okay, so from here, from this point here, okay, from this point here of going here, from this point here going up, we need to know or see how is it that the market is going, how is the market going, right? So already we are from, you can see this is a correction, impulse, and then now we're having a correction. We're just in a correction, okay? We're just in a correction. Okay, so we're just in a correction. So I'm gonna pull up my trend line again, and then I take it there, connect, take it there, connect the highs, and then from here, connect here. There we go. There we go. So we have something like this on gold. Already, this is the forward structure, right? So we can see that it hasn't violated the previous higher highs on the left-hand side. Right? So the higher lows, it hasn't violated them. So from here, we go inside, we go inside. We can see we have first touch here. Okay, we have our second touch here. Okay, and then we have our third touch here. So already I can confirm that this is my first confirmation for a sell on gold. This is my first confirmation for a sell, right? But it doesn't mean that I'll just go and jump into a sell position. Okay, Remember, this is a 4-hour time frame. This is a 4-hour time frame. So it doesn't mean that I can just go for and jump in for a sell position, because what I expect to happen here, we have 1, 2, 3. Here we have 1, 2. So the market can come down here, test these areas, and then continue going up, because already you can see this same impulse. So I go to the 1 hour, same thing. Go to the 1 hour here. When you get to the 1 hour, I pull my trend line like this. Connect. Okay. Connect. So we have the first touch here. Just find the eyes here. We have the first touch here, second touch, and what do we expect here? We're expecting what? A third touch, okay? We're expecting a third touch. And look at where this third touch is going to come. It's going to come at this point of 1855, which is the previous on your left hand side. Remember what we were saying on the left hand side? Is it? So it will be like a double top formation. So if we get a reaction there, we're most definitely going to sell. So, but now, going into the 15 minutes, what is happening now? Going into the 15 minutes. See, we go into the 15 minutes. I have my first touch, second touch. I'm expecting a third touch. Here I have the first touch, second touch. Okay, so going into the 15 minutes, this thing is simple. You can see that this is what we have here. This thing is simple. It's very simple. Because already the market will tell you. The market will tell you whether I achieve this. It will tell you straight. And then you just need to be patient. So here on the M15, you can already see that what we have an impulse, correction, impulse, and then here what we have a correction in the form of what? Of a bull flag. All right. So impulse, correction, obviously this market is going to get out of here. But there are two scenarios, right? There are two scenarios. Don't just be biased and think, okay, just because it's impulse correction, then it's just going to impulse into your direction. Because yeah, it can and it will impulse into your direction, but there are certain areas or certain levels that the market has to test before it does that, okay? So that's why here I am expecting the market perhaps here. If possible, it can come down here, just the trend line continue to go up, or it can go up directly from here. Okay, so it can come down here, bounce, go up, give us a position, and then sell. And then another thing, guys, when we take these sell positions at the top of the structure, when we take these sell positions at the top of the structure, there is a 90% probability that the move, when you go and take a profit, you use the outer time frame. So there's a 90% probability that this move is going to sell from here all the way down here to this low. That's about 10%, 10.2%. Let's see. It's a lot of money, guys. It's a lot of money. Because this risk reward is like 40. That's what I'm saying, that gold is going to pay. So that's basically what I do. This is how I did it on gold, and that is what I'm waiting for on gold. I'm expecting that move up and then a continuation down. Okay. So let's do another play. And then I'll open the floor for questions. Let's do another play. Okay, we have this one right here, German 30. Yeah. Okay. Let me make this one. German 30. People are German money. But let's do the king. Let's do the king. Master. Let's do master. I personally I don't like trading mass, but yeah. For personal reasons, I don't like mass. But if I do find a good opportunity, I go in. Okay, so this is market. So Nasdaq usually when I actually it doesn't hold a lot. When I analyze Nasdaq, uh, because of its volatility, that's why I'm saying no, I don't like Nasdaq because of its volatility. So we can take uh, small account trade, you can shield with small account. Unlike with currencies you can be able to shield maybe 2000 N or yeah. So here you can't shield it. You can't shield it. So okay, basically what happens is the same thing. Same thing. Remember, this is how Nasdaq moves. This is how Nasdaq moves. See, see, see. So we are obviously gonna go and check the overall trend in the weekly. And then already on the weekly, we can see that the overall trend is upward, right? The overall trend is upward. So, okay, sure. Then let's go to the day. We know that we are going to be looking for buy positions, guys. We know that we're going to be looking for buy positions. Okay, so you must not trade against the trend. Don't trade against the trend. Rule number one. Okay, so here on the daily, I can see that in stuff like this, so I want our impulse here, this price here, the highest, and then we have this one here. Okay, so this is what we have here. Then from there, we're gonna take my trend line again. Now you see, this is the last high. On my left, we get broken out of here, right? The price broke out of them here. Price broke these highs. So these are new higher highs. These are new higher highs literally. So you see the importance of using the horizontal gray and not support and resistance. Because if someone was going to be throwing support and resistance, someone would have come here and do like this. See support and resistance, and then we do like this. So that's why we don't use support and resistance because any point can be a support, any point can be a resistance. Any point can be a support, any point can be a resistance. Even if I just draw a random line, it will support something, it will resist something. Let's say I just put a line here. To support something, it will support something, it will resist something. You see? That's just how the market is. You see? That's just how the market is. So we don't need support and resistance anymore, guys. The market is evolving, so it's time to change. So from here, I'm going to check how is the market moving towards the upside. So I'm going to connect my points. There we go. There we go. We have a bullish trend. Already we can see the impulse. The market is going up correctively. Okay. There we go. Now, guys, once you see this, you can't unsee it. Once you see this, you can't unsee it. Like I'm telling you. Once you start seeing this, you can't unsee it. So there we go. Okay, the meeting will end in 10 minutes. So I'll be done here in like five minutes, and then I'll open the floor for questions, and then we'll see if we can have a follow-up or something. Okay. So on the 4-hour chart, you can see already first touch, there, second touch, there, third touch, here. So we can see that 1, 2, 3, we're going up. Okay, we're going up. So I just dropped down the degree to the 1 hour. 1 hour. Okay, where on the 1 hour do I see? Only 1 hour I can see, okay. You have a double bottom here, double bottom here. Then the highest point on this 1 hour. There we go. Okay. So from here now we have to check how is this move, how is this market going there. So there we go with this. We go the highest. One this. There we go. This is simple stuff. So already I can see, okay, sharp. The market, see, this is the neckline for this double bottom. So the market broke out here. Now we impulse. Now we are here at 13,472. Let's drop down to the 15 minutes. Try to look for an entry. It's almost good to look for an entry in the 15 minutes, guys. 15 minutes is very powerful. So here on the 15 minutes, what do we have? We have the impulse correction. We have double bottom. Then we have structure like this. Because it must take sometimes if you don't want to hold, then you can just scalp these moves inside. You just scalp these moves inside if you don't want to hold it. Because from here it's going to buy, it's going to drop a bit here, and then it's going to buy to 13,820. So this is overall a bull flag which is still falling. I can say that. Still a bull flag which is still falling. So just get my tools, impulse, correction. So yeah. Which I'm too fast, guys. I'm too fast. I'm too fast. Yeah. So that's basically what's going to happen. It's going to buy from here all the way to 13,900 something there. This one is straightforward. No ruler here. Straightforward. So expect that what the market opens, it can be choppy. We come here, just this area again, and then continue buying. Okay, guys, we're left with 6 minutes. We're left with 6 minutes. I was planning that maybe we can have this meeting up until 9:30. So I don't know. But let me just unmute you guys and then I'll open the floor to questions and yeah. And if I can't hear you properly, and you can also type your question. You can also type your question if I can't hear you this time. Because sometimes the network is bad because now it's going to be telling me really unstable. So please let's do this. Let's do this. Yeah. If you get cut, we can use the same link, or we can just yeah. So my network is not so. I've recorded this session. I was there in our Telegram, and if you want to ask something, you can always send me a voice note on WhatsApp. Because now I can't hear anything. So I think it would be best if you just type or something. Because I can't hear anything. Let me just end the session, and then I'm gonna share the meeting in our Telegram, and then you can just rewatch the video maybe twice, and then from there you can ask questions, and then maybe we can have another session and we go bit by bit slowly. Because now
No stress.
this thing is the network is, but overall, how is it like? Overall, like you get it, you get it. Like, are you confused anywhere? You know, is there something that you're missing, or is there something that you think that if you could have done that, you know, anything? I know this trading style is very much unique. It's very much unique and very much accurate. It's always accurate because it is nature's theory. The market moves in a series of impulse correction. Impulse. That is nature's theory. That's on its own. That is nature's theory. So yeah. Okay. Let me just do this now. All right.